Next, we have in our panel, in our agenda, Mr. Anthony Migui, Head of Strategic Alliances and Growth from Virtual Pay, to present his keynote on digital transformation of accelerating change in fintech. So let me invite Mr. Anthony here. Wonderful. So yes, the floor is all yours, Mr. Anthony, and you can go ahead, start your keynote.
Good afternoon, everyone. Thank you so much for joining the second FinTech Summit. Glad to be with you. I'm happy to participate in the summit, and I'm quite interested to learn. Well, I had the pleasure of listening in on the previous panel, where we had people like Nolwazi and Paresh, and I'm going to kind of counter their approach or their thinking, because we are going to talk about digital transformation and accelerating the change in fintech. So I'll start by sharing my screen, my presentation, which would start off by definitely paying a bit of bills. I will do the introduction of our company, Virtual Pay International Limited. Then we can go into the subject matter that we're going to discuss. So I hope you can see my screen. Please confirm for me.
Yes, it is. Please go ahead.
Fantastic. So yes, so again, my name is Anthony Migui. I am the Head of Strategic Alliance and Growth at Virtual Pay International. I will start with an introduction of Virtual Pay. Virtual Pay is, we're going to run through, let me give you an overview. Yes, let me give you an overview. We'll do an introduction of the company. Then maybe we'll get time to play a product video. Then we'll dive right into the content matter, which is digital transformation, accelerating the pace of fintech. So the shift from cash to non-cash payments, pros and cons of a cashless society, mobile banking, mobile money, next-gen digital only, artificial intelligence, crypto payments, etc., etc. And then we're going to try and lay down what will be next as concerns fintechs and the importance of financial inclusion, and Reg-Tech, which is regulatory technology. So I will start with the introduction. Our company, Virtual Pay Limited, we are a leading Pan-African payment service provider. We are renowned for bespoke payment solutions that serve a global clientele. We are based out of Nairobi, Kenya. We have presence and licenses across several countries. We are in about 10 African countries, and we are licensed in Dubai and Mauritius. We have a registered office in Dubai. So we actually support businesses to simplify in a secure and seamless manner to receive payments from their clients through cards, mobile money, and alternative payment methods. Our mission, simply put, is to support our consumers and entrepreneurs to send and receive money everywhere and anywhere, anytime, through seamless digital commerce. Our vision, to build the most all-pervasive payment business that supports businesses around the world to remain competitive and ahead of the curve through the digitization of payments. Our customers, broad stroke, we have payment products that are suitable for businesses of all sizes, from startups to large enterprise, and some of the merchants are professional services, retail and trading, financial services, digital services, hospitality and entertainment. The list is really endless. Our services and the methods of interconnectivity are either through websites, mobile application, and simple payment links with you for making payments. So let's jump right in, ladies and gentlemen. We are going to talk about digital transformation. Now, digital transformation, we have had a panel, very worthy panel, talking about cash and the impact of cash in the economy, especially Africa. We're going to come up with a different view about this. Let's start with the quote that you can see on your screen by George Westerman. When digital transformation is done right, it is like a caterpillar turning into a butterfly. But when done wrong, all you have is a really fast caterpillar. So we're going to do this right. If we're going to talk about digital transformation, well, we're going to have to do it right. So cash is king, which was the last question that was asked on the panel. Cash is king, absolutely. We don't deny that, but it is seriously under assault. There's a lot of threat because the world is moving rapidly into a cashless society. This is being seen by the growth of alternative payment methods, mobile money across Africa, which we'll discuss later in the presentation. And we are seeing that recent trends, if you prorate them and project them, you'll see that digital money will soon replace physical cash. One of the impacts of the COVID-19 crisis from 2020 to now, as it still exists, and you will see in some countries like Kenya, regulation pushed consumers to use more in order to avoid transmissibility. It accelerated the growth and the shift from contact, which is cash-based transactions, to contactless transactions. And the cashless economy has really grown. And this has led to a lot of innovation, especially around Africa, where mobile money seems to have taken root and alternative payment methods are also looking to become more mainstream. So the volume of cash transactions, the sheer volume of cash transactions that we are looking at in the global market is projected to surpass 1.5 trillion by 2025. This is from the Global Digital Payment Forecast in 2022 to 2025. We are seeing that we are going to have a lot more non-cash transactions and more embracing of the same systems as we move on in our economies. Now, let me show you a simple infographic. This simple infographic can show you a trend for the last maybe 9 years from 2013, when we were talking about 300 million in cashless transactions from 2013. Look at the general growth, right? But then look at the spikes that are coming in 2019 to 2022. Obviously, there's a lot of embracing of non-cash or cashless transactions. Simply put, we are seeing a lot of adoption and a lot of interest actually in running cashless transactions from the young, the middle-aged, and some of the old, especially in the parts of Africa like East Africa and West Africa, where we have M-Pesa, Tigo, we have MTN, Momo in Ghana, and we have account-to-account transfers in places like Nigeria. So we are seeing a lot of growth. But as we move on to these cashless transactions, you must realize that we're exposing ourselves to some advantages and definite disadvantages. Now, what are the pros and the cons of a cashless society? I want to be positive, so I'll start with the pros. The pros, and it's very evident, you have interacted as my honorable delegates, you have interacted with cashless payments. One, there are lower crime rates because I simply don't have cash for you to steal. However, what makes it safer is there's tracking, there's an ability to track the money. So even if you take from my account, you have to send into a particular registered account, or if should it be mobile money, the police would find it so easily. They would have no stress. I don't think they would even have to work. Just call a telecom and find out who the money went to. Number two, because the mobile money goes through systems and the cashless society goes through systems, the governments are able to monitor. They're able to monitor these cashless movements because they create records. So this comes to work in the favor of our governments in reducing money laundering and also reducing tax evasion. So the governments have sights as against having a pure sack of $20 million moving area to area, beating AML rules and countering for funding of terrorism. Number three, and most important for us who travel a lot, it's easier to travel without cash. So you're able to move your money from economy to economy without having to carry big bulky bags. It makes life easier, seamless traveling, security, safety. Number four, for me, I find that it's easier to manage a simple mobile wallet because it'll tell me my balance every time I transact. Okay, and the last one is a decreased chance of corruption because we'll be able to track it. Let's go to the cons. Every time we share mobile money or such kind, our private identifiable data is shared. Our phone number, name, full names as appear on the ID. So you are actually exposed to a breach of security. If technology fails you, and technology is known to fail, it can hinder access to your money and you can get stranded as opposed to having the physical cash which you can pay for. The older generation does not really embrace fully the digital money because they don't understand where is that money sitting. You say it's on a SIM card. What are you saying? First of all, can I remove it and put it in my wallet? No, so they don't embrace it so easily. The countersign on the other side is there's also a bit of difficulty because of its fluidity. You may spend more because of sheer accessibility, and you will definitely spend more because of convenience fees. So, I mean, if I want to deposit money into, for instance, a bank account from my M-Pesa, I would definitely be charged a convenience fee vis-a-vis taking cash to the counter and not getting charged for it. Right, let's go to the fintech trends. What are we seeing? What are we projecting? The global fintech market is really expanding. And what do we see the fintech market becoming? We're going to see a lot of customer focus. First of all, Africa is, I think, the bastion of fintech development. So we are seeing a lot of competition. So what's going to set you apart? What's setting Virtual Pay apart? What's setting our competition apart? It's the customer focus. We want to talk to the customers. We want to answer the questions that the customers have. Number two, because of a lack of congruence or single baseline of operation, where governments are saying, if you have this base, then you can operate in my economy. Because of lack of that, what we are seeing is we're seeing a lot of collaboration and interconnectivity across hitherto competition. We're becoming partners so that I can spread my services into South Africa. The South Africans can spread their services to West Africa. The West Africans can send their money to East Africa. We're getting into alliances. And I think this is something that we need to pay more focus to if we want to grow the fintech world, if we want to accelerate the acceptance of digital and non-cash transactions. I think we'll go further if we go together. So this is something that we are observing a lot. Let's look at the simple numbers that are impacting the fintech world right now as we speak. So they're actually, in the last maybe 2-3 years, $50 billion have been invested in startups, fintech startups, showing that one, the ROI is seemingly acceptable from the investor perspective. Number two, there's a lot of opportunity in developing solutions based on needs in economies or sectors of an economy. We are seeing about 500 projects coming up every year around cashless transactions and fintechs, which shows that, I mean, the opportunities are vast. Why are we not all there? We all need to jump in there so that we can provide. First of all, we need to bring Africa together. We need to create systems that the rest of the world can deal with Africa seamlessly in a trustworthy manner. So we're seeing a lot of projects being built, and there's a projection that there will be about the value of $305 billion by 2025, 3 years. Wow, exciting stuff. So look at the digital payments in Africa, because we're an African-oriented summit. Let's think African. 70% of mobile transactions globally by 2018 were all in Africa. 50% of the world's registered mobile money solutions are based in sub-Saharan Africa. 20% of Africans have a mobile money account. This is the highest in the entire world. $18 billion is Africa's electronic payments in revenues. And the global commerce growth has grown by 79%. So what all this lead to is smartphones and smartphone adjacent devices are really penetrating the markets, and we're having 39% penetration in the market. So let's look at the macroeconomic factors that are driving fintech in Africa. 66%, very large number of people in Africa are unbanked. Sub-Saharan Africa are unbanked. 65% of the population is under 35, increasing accessibility and acceptability of the same. There's a high mobile penetration, 80% in Africa, and 46 billion inflows from our relatives in overseas countries. So we're having a lot of remittance inflows into sub-Saharan Africa by 2018, 2022, a lot of inflows, which means that we need to have systems that can accept them in a seamless manner. And we have at least very low banks to population people, 4.5 per 100K people, and we have low penetration of internet. So mobile banking, let's talk about it real quick. The banking industry has really struggled, as I mentioned in the beginning. It's really struggled in the pandemic era because governments drove their citizens to deal in non-cash transactions. So we saw a lot of people, clients, businesses, organizations shifting from cash to accepting mobile money, including M-Pesa in Kenya, MTN in Rwanda, Tanzania, Uganda, Ghana, Nigeria. And there's a lot of growth in terms of volumes where transactions have really grown. You'll see the 8 of the 10 countries with the highest acceptability of mobile money coming from Africa. Initially, it was a means of sharing money from me to you, but now it's actually a means of facilitating trade and commerce. So we have pay bills, we have till numbers, we have accounts that you can send mobile money to. Ourselves at Virtual Pay, we have more than 50 local and international merchants on mobile money solutions. The next slide shows basically the growth of mobile money and the transactions, and you'll see the Middle East and Africa is leading in this very much so. Right, next gen digital only banks. When you talk about non-cash, we're not talking about money only in mobile wallets, we're talking about digital banking. There's a rapid increase of the same. And some of them are growing from fintech companies and their partnership with the same fintech companies. And digital banking is looking like it's going to be the way forward. They will beat the traditional brick and mortar, and we will see a lot of impact. The next slide shows the analysis by Business Financing in the UK, talking about the acceptance of digital banking across Africa. And we're seeing that Carbon is one of the biggest ones in Nigeria and Kenya. Zuna is another one that's in South Africa and Zambia, and we need to learn from them. Let's understand their models and see how we can accelerate, first of all, a cohesive approach towards digital and non-cash transactions, and also try and emulate to try and create a more enabling environment for our citizens themselves. Artificial intelligence is another thing that comes into play, and a lot of AI is allowing banks and fintechs to learn habits of their customers and their clients so that they can understand what services are needed, they can identify risks very easily, they can combat cybercrime, and they can ward off threats. So we use ourselves reporting tools that give our customers access to valuable business intelligence through seamless API integrations for cards and mobile money payments. Now, cryptocurrency and blockchain, vastly misunderstood and highly regulated, but this is the future. They have a potential of creating a vastly more borderless and globalized economy, while also combating financial inequality and providing secure financial services. The one thing about blockchain is once it's put in, it becomes decentralized, and that now makes it so much harder for guys to modulate this. Excuse me. So what is the downsides of cryptocurrency? I mean, there are very unreliable. They vary in levels. I mean, people have varying levels of literacy, and there's lack of a proper regulation, except I think in 3 countries in Africa. I think there's a lack of regulation in majority of the African countries. And this actually was of interest from the investors. What you're seeing here is acceptability from a 1%, less than 1% to 9%, not very high for a region that is highly mobile, youthful, has access to internet, and has capital to invest, not very good. So we need to look at that as a problem. Now, you can't only talk about the benefits without looking at the risk. How do we minimize the risk? We have to build cyber resilience. So we need to end cybersecurity. First of all, we need to make the attacks harder. Number 2, we need to make the reward for the attackers and the hackers less. So we need to adopt standards that can build resilience in our companies. We're talking about risk management, disaster recovery, business continuity, cyber insurance, and next level cybersecurity strategies. Ourselves, we are certified to the Payment Card Industry Data Security Standard, the PCI DSS, and we are also certified to ISO 27001, which is the Information Security Management System. This allows us to ensure that our customer data is secure and our operations are working with internationally based and recognized standards. So a quote by Robert Mueller, as I start to wind up, is that there are only 2 types of companies, and this is the truth: those that have been hacked and those that will be. Again, remember, make it harder and give them a less reward. So just a small picture showing you what we are looking at: digital transformation, open banking, automation, fintech, Internet of Things, data analytics, GDPR, artificial intelligence, etc. I'm sure I will be able to share my presentation to those who want to have it. Just hit me up on my chat and I'll be able to respond to you. Now, what's next for fintech? I had mentioned before, we are having growth, rapid growth. We have a large unbanked population in Africa. Our developing nations, we have about 1.7 billion unbanked. What is the next step for fintech? Bank these guys. So we need to create an opportunity and enabling environment for them and for the fintech for the fintech users to be able to access financial services through our innovative fintechs that are coming around. Look at the inclusion that it can cause. Smaller nations are rapidly expanding their financial inclusion. You're seeing from Kenya, South Africa, Nigeria, Seychelles, Rwanda, which is a small country, coming up as a leader in fintech development. We are embracing this. It's time to embrace it as Africa, and it's time to grow. Let's accept it's part of who we are now, and it's part of who we're going to be in the future going ahead. So this is the regulatory framework and landscape on the Reg-Tech perspective, which I had mentioned at the beginning, the regulatory technology regulations. A lot of startups coming up. We have a lot of guidelines from the central banks, etc. But we have a lot of weaknesses. Our governments don't work together. We don't have a baseline of operations that would allow us to break into economies with our innovative services. So we have absence of regulation, we have no convergence, we have lack of funding from the government perspective, and our frameworks overlap, and they actually for the innovators and the existing fintechs to be able to play in the field in a very, I would be ready and willing to take any questions, comments, opinions, etc.
Thank you, Mr. Anthony. So as time is pressing, we will take one question from the attendees. And yes, of the millions of taxations we process monthly, most are cash-based. Digital is future, and we are seeing exponential growth in transactions through our digital stuff. Collections remain critical to any organization's collection strategy. So please share your views about it.
Absolutely. The baseline definitely is that cash is king. That is a baseline. No argument about that. But we're talking about the future. Where are we now and where are we headed in the future? Definitely, no company will reject cash, okay? Nobody will say that I will not collect your cash payment because I want to embrace digital currency or non-cash transactions. However, the truth is, the enabling factor is the development of the fintechs as it is now. So the banks that are dealing in the traditional cash payments have already established vast networks. They've already established a footprint across the world where they can accept cash easily. Now, small countries like Kenya, for instance, I want to use the country that I operate in most. They developed the mobile money. Okay, so it's largely acceptable here. I haven't touched cash in about 2 years, but it will not be accepted in Nigeria. You might say mobile money, right? It will not be accepted in Ghana. It will not be accepted in Egypt because our networks are not as intertwined as what we have in the traditional brick and mortar cash economy or the cash system. So yes, the minute the situation we have now is that the cash transactions are more facilitated because of the network and the existing frameworks. But what we are seeing is an explosion of fintechs being established and seeing banks that were traditionally rigid changing their posture towards digital currencies, digital transactions, opening up their system to APIs, to fintechs. Banks that never would have thought about accepting any digital or non-cash. What I'm saying, keep your eyes open. The transactions are going to move largely digital because 1, safety, 2, convenience. I think that would be my answer to that.
Wonderful, wonderful. Thank you, Mr. Anthony. And I love the way you explained the change is imminent. So just adapt to the change. Thank you very much for sharing your views, and thank you for answering the questions as well, and having you as a part of FinTech Africa Summit 2022 second edition is our pleasure. Thank you very much for joining us.
Thank you for having me, and thank everyone for coming in.
Wonderful.